If your car just got declared a total loss and you still have a loan, you are about to hear two numbers that decide how painful this is. Number one is what the insurance company says your car was worth right before the crash. Number two is what your lender says you still owe. And if number two is bigger than number one, you can get stuck paying for a car you can't even drive. I'm Tennessee attorney John Griffith, and I've been helping Tennesseans through situations just like this for over 28 years. And today we're going to walk through the total loss and loan process in plain English, step by step, so you do not get shortchanged. The quick reality check here is the core issue. Insurance usually pays the value of the vehicle, not the balance of your loan. Your lender, on the other hand, expects the full payoff amount under your loan contract, even if the car is totaled. The difference is what people call the gap. It is the amount you still owe after the insurance payout is applied. If you have gap coverage, it can help. If you do not, you need a plan fast because interest can keep accruing and payments can still come due while you're trying to sort this out. Step one, get the total loss offer and ask for the valuation report. Do not treat the insurance company's first number like it's carved in stone. Ask for their valuation report they use to calculate the actual cash value. In Tennessee, insurance regulations for first-party total losses allow insurers to settle based on the cost to purchase a comparable automobile. And that framework specifically references including applicable taxes, license fees, and other fees tied to transferring ownership. So when you look at the numbers, you want to understand what they included and what they did not. Now here's how you pressure test their valuation like a pro. Check the basics for errors. Make sure they got the year, trim level, mileage, options, and condition correct. A single mistake like calling your upgraded trim a base model can cost you real money. Check the comparable vehicles near you. Look up listings near you for the same make, model, year, similar mileage, and similar options. Save screenshots or links. Gather proof of value you can document. New tires, recent major maintenance, a brand new battery, or other meaningful upgrades can matter. Keep your receipts. You are not arguing feelings, you're arguing facts. Ask what happens next if you dispute it. Sometimes there's an internal review. Some policies have an appraisal clause. The point is not to get into a fight. The point is to make them justify their number and correct obvious problems. A lot of people lose money here because they are exhausted and they just want it over with. I get it, but this is the moment where slowing down for 1 hour can save you thousands. Step two, call your lender and get the exact payoff amount. Next, call your lender and ask for the payoff quote, not your remaining balance, the payoff. Those are not always the same because payoff can include daily interest and other amounts due through a specific date. Ask these questions. What is the payoff amount as of today? What is the per diem interest amount? Where should the insurance check be sent? Will they accept an electronic payoff from the insurer? Do you need to keep making payments while the claim is pending? Here's the safest mindset. Until the loan is paid off, act like it is still your responsibility to protect your credit. If you can keep paying while the paperwork moves, you reduce the risk of late fees or credit hits. If you cannot, call your lender and ask about options. Ignoring it is the worst move. Step three, understand where the money actually goes. When there is a lien on your vehicle, the insurance check often goes to the lien holder first because the lender has a legal interest in your car. In many cases, the insurer pays the lender up to the payoff amount. And if there's anything left over, that remainder goes to you. If the payout is less than the payoff, that is the gap, and you still owe that portion unless gap coverage steps in. Also, pay attention to your deductible. If this is your own collision coverage, the deductible usually applies. If the other driver is clearly at fault and their carrier accepts liability, property damage may be handled through the at-fault driver's policy and the deductible may not apply the same way, or not at all. The details depend on how the claim is being paid and by whom. Step four, check for gap coverage and file that claim immediately. If you have gap coverage, this is the moment it earns its keep. Gap coverage may be on your auto insurance policy or through the dealership or lender as part of financing. It may be built into a separate contract you signed at the time of purchase. Call and ask directly, do I have gap coverage? And what do you need from me to open the claim? Then ask what gap does and does not cover. Gap often covers the difference between the insurance payout and the loan payoff, but it may not cover late fees, extended warranties, or every add-on that got rolled into your loan. The rules depend on your contract. If you do not have gap coverage, do not panic, but do not drift either. You will need to decide how you are going to handle the remaining balance, and the longer you wait, the more stressful and costly it gets. Step 5. Stop the silent money leaks, storage and rental. In total loss situations, they often come with hidden costs that sneak up on people. Storage is a big one. Your vehicle may be sitting in a tow yard or body shop, and storage charges can pile up quickly every day. Under Tennessee insurance regulations, insurers are supposed to provide reasonable notice before terminating payment for reasonable automotive storage charges and give reasonable time for you to remove your vehicle from storage. Translation, you do not want to be surprised by a cutoff. Get clarity early and get everything in writing. Here's what I recommend you do quickly. Ask the adjuster who is paying storage today. Ask when the storage payment will stop. Ask what you need to do to release your vehicle to salvage pickup or to move it. Remove your personal property as soon as you are allowed to do so. Keep your receipts for towing or related costs. Rental is another leak. Even when the rental coverage exists, it often has limits. Make sure you know the last covered day so you are not stuck with an unexpected bill. Step 6. Decide if you are keeping the vehicle or letting it go. Sometimes people ask, can I keep my totaled car and fix it myself? Sometimes the answer is yes, but you need to understand the consequences. The Tennessee Department of Revenue explains that if a vehicle is deemed a total loss by an insurance company, the original title and registration are void. For certain vehicles, owners can apply for a salvage certificate, and a salvage vehicle cannot be operated on Tennessee roadways under that status. Tennessee law also defines salvage vehicles and salvage titles, including that a salvage title vehicle cannot be registered for use on roads or highways unless it has been issued a rebuilt title. So if you buy back the salvage, here is what to think about. Your financing is going to get harder. Many lenders do not want to finance salvage or rebuilt titles. Insurance can be complicated. Some carriers limit coverage options for salvage or rebuilt vehicles. Resale value takes a hit. Even if you repair it perfectly, the branded title often follows the car. Also, if you keep the vehicle, Tennessee guidance points to the insurer's responsibility to notify the owner about the obligation to apply for a salvage title or non-repairable certificate. And the insurer may even withhold payment until that application happens. This simple takeaway is keeping a totaled car can be done, but it is not a casual decision. Make sure the math and the paperwork make sense before you choose that option. Step 7. If someone else caused the crash, you may have more leverage. You may have a claim through their liability coverage. And while the property damage side focuses on the vehicle value, your overall situation may include other losses. For example, even in a just property damage claim, people commonly deal with rental costs, towing, time off work to handle logistics, and the headache of being without a vehicle. If you were injured, that is an entirely different lane of the case, and it deserves separate attention. One warning here, do not let a quick property damage settlement accidentally sweep up injury claim issues. Read your release carefully. If you are not sure what you are signing, pause and get advice. Common mistakes that cost Tennessee drivers real money. Let me give you the short list of what I see people do that makes a bad situation worse. Accepting the first valuation without checking it. Forgetting to ask whether taxes and title and related fees are included in the settlement calculation. Letting the car sit while storage charges accumulate. Stopping loan payments without talking to the lender. Assuming gap coverage exists without confirming it. Rolling the remaining balance into a new loan without understanding the risk. Signing paperwork fast just to be done. If you avoid these mistakes, you are already ahead of most people. Quick answers to common questions. What if the insurance payout is not enough to cover my loan? then you likely have a gap balance. Gap coverage may help if you have it. If you do not, you will need to work with the lender on a payoff plan. Do I have to keep paying my loan if the car is totaled? In most cases, yes, until the loan is paid off. A total loss does not automatically erase the contract with your lender. Can I dispute the insurance company's value? Yes. Ask for the valuation report, correct errors, provide comparable listings, and push back with documentation. What if I want to keep the car? You may be able to retain it, but Tennessee has salvage and rebuilt title rules that can affect whether it can be registered and driven, and the paperwork matters. If your car is totaled and you still have a loan, the goal is simple. Protect your credit, protect your payout, and stop the extra costs from piling up while you're trying to replace your transportation. Get the valuation report, verify the numbers, get the payoff quote, confirm whether or not you have gap coverage, and stay on top of storage and paperwork so you do not get hit with surprise fees. And if you want to be better prepared for every conversation with the insurance company, watch the next video. 5 questions insurance adjusters don't want you to ask. These questions are how you keep control of the claim instead of letting the adjuster steer you into the cheapest outcome for them. Don't miss it. We'll see you there.